Good day. Ira Epstein with your financial market wrap-up, and this is for Thursday, the 27th of February, 2020, and I'm back. Now, in the morning, I normally do a morning video. I've got my eye checkup in the morning right at that time, so I won't be doing one, but I will be back here to do the weekend edition of these videos for you. And I've put out a new feature. For many of you that are getting my Spider ETF video, which is free right now if you just let us know that you'd want to try it. Putting it out. I put out the daily numbers. So for those of you that get that video and you're wondering how I come up with my window envelopes, I've now listed them all there. If you go to the member login, you will see that. Okay, so how do we take a look at today's action? Well, it's one of the largest individual breaks ever in some of the stock indices. Okay, it's a panic market. This isn't a correction type market. We're in a technical correction because when you get 10% from the high of the market down, that's called what? That's called a corrective move. Between there until you get to 20% in stock indices, it's in the corrective move, and under 20, you're in a bear market. We've just peaked out on February 19th. This is only the 27th. You've had a 10% correction, which I believe is the quickest 10% drop in stock index history. Unbelievable in its scope. If you look at my hair, I'm a guy that grew up with people that had polio. I remember it like yesterday. Chicken pox, the measles, and my point is these things get cured. The world doesn't end. And if you're betting the world ends, God bless you, I wish you the best, but you're going to be by yourself because the rest of us are going to be here. It's not going to end. It'll run its course. The plague ran its course. Other things run its course. This is not something the Fed can get you out of. This is Mother Nature. This is all about science. It'll run its course. But in the meantime, you don't put your head in the ground. The bottom pickers out there, I hope they have a good time with it. This is a time where you're a bit defensive in the market. Yeah, there'll be a shopping list for certain things you might want to have in, and there'll be some people that say, you know, if a year from now this market's going to be through that into something else, and they're probably very correct. If we look at the economic data, we haven't seen the impact of the COVID-19. So as much as I love economic data and I look at it each morning and I publish what they are, I realize where we're at, and that's all I'm saying. You're in this disease thing, and with this gray hair, I've been there before. I remember the poor kids that had to go into these iron lungs and everything. I remember it like yesterday. You couldn't go to school. I don't know if you're aware of that. The measles would break out. They didn't want the kids to come to school. This has all happened one way or the other before, and I have been through it. In the weekly chart of closes, straight down, what can you say? This is a market that right here was at 33.81. Then you lost the next week 1.23%. Then you lost 11.25% so far. Okay? So you're down in correction territory. You can't argue that on a closing basis. I don't know where tomorrow will close, but you're in correction territory at this point. This is a monster break that you can't blame yourself anything about. The key is to always have a stop. You have to know, you don't trade, I'll look at the market later. You always have to have protection, be it to the upside, to the downside, whatever your position is, because leverage is what futures are about, and you've got to understand leverage. And this is just a monster break. Will it keep going down? Well, this weekend, here's what's happening. Every Friday, people are taking positions right at the end, gambling for what the weekend's going to say on the COVID-19. In the past, we were looking for all over the world outside of America, where's the problems? It's starting to come to our own shore. And now we're getting to the point where people want more testing kits. We've just found one of the person in California got it with apparently no contact, according to what we're hearing from the CDC, with other people. I don't know how that happens, but something happened. Okay, if we get more cases, where are we? The governor of California said that he needs 8,400 immediate testing kits for people that came off of foreign travel. I think there's a lot more people that go through California from Asia than 8,400. So, and by the way, I said Asia. Every country now has this, except what is it, Antarctica. You're under even the 100-day average. You're slashing through everything just instantly in the market. So do you want to sell a break like this? Why would you? If you're a bottom picker, and that's a crazy word. People that go bottom fishing end up at the bottom. You don't want to do that. You want to be a trend trader when you can, and there is no trend. This is a vertical price drop in all the stock indices, every one of them. It's hard to catch anything like that. The only one that's set up for a downtrend was right here, the Dow. It had lower highs, lower lows, and it closed this day under the 18-day average, and it lost its upside momentum. It already had hit the 18-day average. If you were to say to me, Ira, where might it go? Well, maybe the lower Bollinger Band and the 100-day average. If you're asking me, did I see this type of drop coming out of it? Come on. That is what we call a panic that's going on, and that's where you're at in these markets. The Russell's the same, but the Russell's been terrible. The Russell didn't make a new high with the other markets. It has been like the Dow, the only other one that was in the weaker state. The other markets were powerhouses, but they all peaked basically February 19th, including spiders, ETFs. Go take a look. You'll see the mass. In the VIX, this isn't as high as it can be. You know, we were recently at 50. It was about a year and a half ago or something. So there's room here if it wants to go more. There is panic at our shores. What if they say that there's more cases all of a sudden that they discover on Saturday or Sunday when the markets aren't open? I don't know what to do with that. What if they say, hey, we've got it under control? I doubt that, but it could happen. I don't know. The bonds, we can see what's going on. Today I heard bright people saying we're going down to 0.25% on the 10-year note. Guys that I really respect. Going, wow, that's quite a move, but that's what they think. Because we have room to cut rates. I think the whole world's going to cut rates at the right time. I give the Bank of Korea, you heard what I just said. I was with Rick Santelli as I was getting off Fox today, and Rick's on CNBC. We happened to be walking off the trading floor, and I said, what did you think? I said, I thought the Bank of Korea was courageous. He agreed. He said, you don't waste your bullet when you can't control that disease. You wait for it to peak out, and then you make your moves because you want to be helping the market as the peak, whatever that is, takes place. To shoot the bullet now by the Fed, our Fed, what are you going to accomplish? We're just getting into the disease. Same in the 10-year note. So the world is buying the U.S. instruments. I don't think it's us buying it. The Fed's job is being done for it. Interest rates that are cheaper here. It's helped the housing market. It's helping other markets. The dollar's getting hit right now. Why? I think it's called repatriation. I think people in Europe and Asia are taking their money home right now. You've had a stock market that's breaking. Send me my money. I don't even know if I can leave my house. I need my ATM cash, and I need funds right here. Month end, I think that is going on. It's my own opinion, and I think it ends as quick as it goes on. In other words, end of the month comes in, and then we start seeing the markets go maybe other ways. It's not an uncommon phenomenon. In the euro, nice rally, but do you honestly think the euro's in a better economic position to do anything than the U.S.? But you're getting a nice bounce. You got maybe too cheap here under the 108, so you're pushing 110. I look for very serious resistance if it can even get to the upper Bollinger Band or 100-day average of closes. But I do understand people think that America's going to get hit by the disease. That's another element. They've already been hit. It's already been factored in. Germany might be in a recession. I get it. I understand the same thing in the yen. I understand repatriation. You got higher lows, higher highs. I'm looking for the resistance up in the 9,200 area, but I have serious doubts the market can go and stay up that high because their economy's bleeding. When we look at the Bitcoin, okay, the markets come, and by the way, now I'm in the March. Remember, the February's bye-bye. I think it's tomorrow's the last trading day. Think lower highs, lower lows into the 100-day average and the lower Bollinger Band. For those of you that are regular viewers, you know what I'm going to say. be it on the upside when you get to those two numbers, or they come together on the downside. It's where I think if you were short, that's where I think people are covering their shorts. And that's what I think is going on. The other thing about Bitcoin, it's not proving its value in this COVID environment. So it's not the safe haven against that. When we come to Brent, and I'll finish up today with the April, but you want to be moving to the May Brent, and I'll show you that in a minute. Well, you're getting your bounces, and it's staying over the 18-day average, which says that Brent still has more value, and why not? We have an OPEC meeting coming up right away. OPEC has already said, via the Saudis today, that they're going to cut 500,000 barrels a day of shipment, ideally to China. Well, who's going to carry the brunt of that? Probably the Saudis. I haven't heard that the Russians are ready to join in with them. We'll find out if they do or don't. When you look at May Brent, and that's what you want to be following, you've gone literally from an upper Bollinger Band to a lower one in 5 days. It's highly unusual. You've also gone from there, 59.50 down to 51. So you've broken the market, what is that, about 15%, no time at all. WTI peaked out right at the upper band, now you're at the lower. You know I'm not going to tell you that you go short under a Bollinger Band. I think pros cover against Bollinger Bands. Doesn't mean you can't go lower. I don't know what this disease is capable of. Gasoline, you were just $1.80 a barrel. You realize you're $1.48 tonight. Wow. So going into March, we are looking at a market that has just dropped 20 some odd percent. When we come to nat gas, you're going to get to that warmer weather now in March and April. So this market's got a real issue, and we don't have the Chinese export market we were hoping for. I can understand the weighing on that market, and it's going to be there for a bit. I mean, those are the fundamentals, and the chart action is really, really very sorry. When you take a look at questioning your trade selections, you know, I talk about this each morning. Other than Tuesday, where I had an eye operation at about 7:40, and I did put out an update that morning, I'm pretty sure I did. I try to put these out every day. You know, it's going to take a lot for me not to do it. I may not be able to write some days, but other days I'm going to get these videos done. And the idea is I want to give you what I'm seeing in the markets, and I'm going to talk about 40 charts. I'm also doing these on spiders and ETFs. So I'm going to give you first a touch of the fundamentals. That's where I'm going to start, because in the morning I've already read what's going on in Asia. I've already read about Europe, and I'm back into the American markets. And in normal times, I'm telling you, here's the economic reports of the day. These are the estimates, blah, blah. Right now, that's not what's driving the market. It's COVID-19 that's driving the market. But that doesn't mean technical analysis is lost. In fact, being able to say you're in a panic mode in the markets is technical analysis. So there are times when I'll tell you, hey, I don't think you do anything in markets. There's a time where I just say, put your hands in your pocket, you live to fight the next day. Pretty much what today's about. As you can see, I cover all these areas, and on the bottom, there's a scroll bar that you can move. It will light up and you go to the different areas. We also list on the sides where you can see what you're in. You don't have to watch the whole 20-minute video. You go where you want, or you can watch the whole thing. Each one's a learning experience. I try to really espouse what I know about the markets from a charting point of view. So what does it cost? Not expensive. It's less than a tick in most markets. $7.95 for the first 30 days. Then if you decide that you want to continue with it, it's either $15 every 30 days after that, or you can buy a one-year subscription right up front for $156, which is the equivalent of $13 a month. For the time being, I've been throwing in a free subscription to my ETF Spider video, which is going to be more than these. So you get an awful nice package. Now, if you're interested, go to our website, go under research. That's where you sign up for it, and we'll put it in your hands. I'm Ira Epstein. Glad to be back. I'll see you all tomorrow afternoon.